Well, why don't we kick off? We've prepared a little slide deck, maybe just to cover, I guess the premise of why we're here today, and a couple of the key things about end of financial year and tax time and getting ready. Sure, we are recording the session, so thank you for flagging that. And then I think from there we'll go into some questions. I know there's not that many people online, but we have had some questions logged by some of our people who've pre-registered for the event today, so we'll ask those. And then we've prepared some, based on some industry research that we've done. It's not very common that you have a panel with the level of expertise that we have here today, so we'll take full advantage of that. And make sure that we ask some good questions. So firstly, I just want to say thank you to FITREC, Accountants Direct, and Involve Digital. So thank you so much for making the time. I know this is a busy time for everyone. So really looking forward to getting your insights, and hopefully we can really help and invest a little bit in the PT community today. So we've got it down for 60 minutes, but like I said earlier, I think we'll hopefully try and aim for around 40 minutes. And if there's additional questions, then we've got that 20 minutes in the bank for us to go through. Perfect. The only thing I want to add is that everything that we discuss here today is obviously general information. I would highly recommend that you talk to your accountant and or other advisors, because your individual circumstances may be different. If you don't have an accountant, I know two exceptional ones that are on the call with me, and I'm more than happy to get you their contact details and get you a call with them. But yeah, so obviously take this all as general information, but I'm really hoping that it kind of sets you up for success as we're going through. Perfect. Then just go to the next slide there for me. I guess just to kind of set the scene of what today's about. So leading up into tax time, and I should probably introduce myself actually. My name's Johan. So I'm the founder of Soul, an accounting application for small businesses, but we're really focused on personal trainers, and we've actually tailored the application for PTs. And I guess what we always hear is that leading up to tax time, there's this flurry and this worry from everyone where they haven't stored the right receipts, they haven't sent all those invoices. There's a lot of work that's been done. There's questions around cash flow, but there's also a lot of questions around, what do I actually need to keep in what register or information do I need and actually to do my tax. So what I want to talk about today is really understanding what that is, kind of get your checklist sorted, and then hopefully we can answer some of your questions as well that you may have to your personal situations. We are going to meet our panel in just a minute, and you can probably see their videos up on screen. But I guess just as a little bit of background, we'll be able to talk about the tax, but we've also got some experts on here to talk about the PT industry specifically. So if you've got questions, you're new to business, you want to understand what you need to do to run your business, you can ask those questions today as well as also a little bit of marketing and growth. So how can you scale? How do you actually think outside the box of just, working at a gym, paying rent, potentially around pricing? Feel free to ask those questions as well. We've got the right people on call today to be able to answer those. If we can't, we'll obviously take it offline and we'll get back to you. But really hoping for a collaborative conversation today. And for the panel members, if there's something that points out to you that you can kind of see that we need to dive deeper into, please feel free to do so as well. We could spend some time on that. Brilliant. Maybe if we could go to meeting the panel. I had a bit of a think about how we should run this and how we can make this a little bit more interactive. What I was thinking of doing is if each of you could introduce yourselves, but if you had to liken running a small business or a sole trader business to a movie, which one would it be? Now, I think that this is a little bit out there kind of question. When I was thinking about it, I was thinking about Rush Hour. I thought that that's probably where I would land, where there's a lot of things happening and there's a lot of action throughout the movie with a bit of humor thrown in along the way. But I thought that was maybe a good way for us to kind of get to know you guys a little bit. And if there's anything else you want to say about, your business and kind of what you do in your experience, please feel free to throw that in there as well. Lewis, do you mind if we start with you and then we can kind of go from there?
Yeah, sure. Hi, everyone. My name's Lewis. I'm the Global General Manager at FITREC, which is a registration body that supports health, wellness, and fitness professionals throughout their careers. I say global GM because the industry is global and we service professionals all over the world. Good question regarding a movie. Man, I would probably say Kung Fu Panda. Probably Kung Fu Panda, because it's almost like he doesn't really know what he's doing, but he still seems to make it work somehow. There's so many aspects to the industry that you can never really know everything. And it's almost just kind of like, just get thrown into the deep end and give it a go, see what sticks, and then work on the things that don't work for you, and try and improve on that. That's the first movie that came to mind.
I think we've lost your hand again. Oh, back again. There we go.
Back. Sorry about that, guys. Thank you, Lewis. Sorry, did we want to throw to the next person? Maybe Shashir, you can go next.
Hey guys, I'm the CTO of Soul, and I've met most of the guys out here. The movie that I'm gonna choose, well, Joey already took Russia, but I'm gonna pick, I'm a Jackie Chan fan too, but Shanghai Nights, that's my pick. Buddy cop, taking on the world together, all against the world.
Thanks, mate. Michael?
Hi guys, I'm Michael, founder of Involved Digital. So we're a digital agency and business growth agency. And the movie I'd liken ourselves to would be Limitless, because I think we're really lucky to be living in an age where, we've got everything at our fingertips. Go back 20 years, 30 years even, like that wasn't the case. But now we've got so much information, and with obviously the surge in AI, anything's really possible for the small businesses. And what we're seeing a lot of at the moment is the small businesses are typically the ones that can move quicker, faster, they're more agile than the large corporates. So I think we're coming into an era in time where we've got such a huge opportunity for sole traders, small businesses to really scale and grow.
That's great. I completely agree with that. Julie?
Hi, I'm Julie, and I am practice manager and also a tax agent with Accountants Direct. So I had a 10-year background in the fitness industry, and looking at small business, the movie I would think would apply to a lot of small business would be Speed, the movie Speed. I think you've got to be focused, and like the bus, you've got to keep your foot on the pedal at a certain level, and be fast thinking. So I think that's probably how most small business people feel most days.
Yeah, I can definitely attest to that. Great movie choice. I actually really love that movie. Cool. Stephen, do you want to finish us off?
Yeah, sure. Steve Burns. I'm the founder of Accountants Direct. We've been around for about 15 years, look after about 5,000 clients plus in Australia and around the world to do their tax and accounting. Before that, I was actually around 20 years in the fitness industry and recreation. I was a trainer for a while, worked in membership sales for clubs, and then we've even done some consulting over the last few years in relation to pricing and offers and things like that, which kind of steps outside our accounting type of area, I guess. My favorite movie of all time has always been Kill Bill. Purely it's a fantastic film, but one part in it where Uma Thurman faces the crazy 88 in a nightclub and has to cut her way through 88 crazy Japanese people. That to me is like every day in the small business, where you've got to actually just rip through, those tasks. And at the end of the day, then you've got the last one to do, and it makes you feel really good when you cut the head off that. So that's probably my best movie yet. Thanks.
Oh, perfect. I think we've got some good choices in there, and some good films too. So great. Well, thank you all once again for making the time, and it's really good to have you. So hopefully we can get some and extract some really good insights from you today. Esther, do you want to go maybe to the next slide? I might just do an overview, I guess, of what EOFY actually means. I have a funny story where my partner's sister, I kept talking about EOFY and how busy it is for accountants and all this stuff. And she said to me, sorry, I have to ask you, what does EOFY actually mean? And it kind of hit me that, we have this acronym as Australians, and lots of people don't even get it. So, I mean, end of financial year or EOFY, I think, is a really important time for small businesses. You know, it's something that a lot of people are probably scared of, and there's a lot of unknowns every year. For me personally, I mean, you can read what's on screen there, but what it boils down to is structure and admin. I think they're the two things. You know, if you do that correctly and you can set up that system, it makes things a lot easier. Obviously, having the right expertise and people in your corner helps as well. I don't know, Stephen or Julie, you know, what from your experience, and you've obviously got quite a lot of experience specifically with PTs as well. You know, what causes the most delays? You know, if there's a PT client coming to you, like what do you see that really causes a lot of issues that people normally need to work through?
I'll just jump in there first, Julie. The thing is, at the end, EOFY, people get all frantic, and at the end of the year, and they have to throw all these things together in the last few weeks. It's not, if you've actually got your act together right from the very start, you shouldn't have any problems at all, really. Maybe a little bit of planning towards the end of the year. This is the funny thing, and people get so excited about it, and then they're given advice, you know, by Officeworks to go out and, you know, buy a laptop personally, you know, for the last 2 weeks of the year when they can't really get a tax deduction for that, things like that. There's a lot of misinformation, but I think if people get their act sorted out right from the very start, then realistically it shouldn't be a big stressful time of year. It should just be where you kind of cross the I's and dot the T's and the other way around, and then just move forward and get things done, you know. But we do find a lot of people that come to us in a horrible state. That they haven't done lodgements for, you know, sometimes up to years. They haven't got any decent bookkeeping, or if they are using bookkeeping, it's just completely a mess. Or they're not using an online system, you know, like Soul App. We find those people are generally the ones that are mostly in disarray. So that's how I see end of financial. It shouldn't be stressful, but it's probably the people that aren't you know, keeping up to date and doing the things through the year they should, that have the issues towards the end of the year heading to June 30.
And Stephen, I think a lot of people that I've personally spoken to, I think taking that first step to set up that system and that process and, you know, staying on top of it seems very daunting. Do you think that it's possible for small businesses, sole traders, like if you're working for yourself, I think your movie Kill Bill is kind of exactly what you're saying, right? There's so many things you've got to work through as that solo founder person. So how would you go about doing that? Like what's the best way to kind of take that first step and get those things in place?
Yeah, well, the first thing that we found is just admitting that you've got a problem. You know, it's a little bit like alcoholism or drug addiction. You got to admit that you've got a problem first, and then move forward to try and get someone to help you to fix it, right?
Yeah.
You know, whether that's a friend, a family member, you know, Uncle Dottie who used to work for the ATO, we get a lot of those, or you come and see us, then generally you just got to have someone to put you on the straight and narrow. Or, you know, these days you can certainly try and get as much information you can, you know, online. But I find that if you've got someone that comes in and gives you an evaluation of where you're at right now, I mean, we very, very quickly, within say an hour, we can jump into someone's bookkeeping and say, look, it's a mess, or you're on the right track, or you know, you're okay here, but you've got to actually move you know, in this further direction. We can check, for example, if they have made their lodgements or not. So it's just, I think taking that first step is getting some help.
Yep. And Lewis, I think from, you know, you've obviously got extensive experience in this industry as well. Like, do you think that, you know, people are alone or in the minority who don't have these things in order? Or do you think a lot of people struggle with this? You know, you're not by yourself if you're feeling these questions, and it's okay to ask for some help.
Yeah, I don't think we'd be having this meeting if it was just one or two people that are having problems. It's the majority of the industry. I'm not going to say the entire, because you'll see the difference between a successful trainer and one that's kind of stagnant or doesn't get past their first or second year. And one of the major reasons why somebody can be in the industry for 10, 15, 20 years, be successful, is because they have the tools, or they know how to use the tools to run a business, not just train clients.
Yep, that makes sense to me. Well, great. Well, I think, why don't we skip to the next slide, Esther, so we can get to some more questions. I think we've covered most of the things on screen there. I think, you know, for me, one of the biggest things that I've heard, or the misconceptions about it, the end of financial year and what you have, is that a bank statement is enough. So a lot of people think that you can make deductions. They don't keep their receipts. They lose their receipts. They might not send invoices, they might not have those documentation pieces, and they think that, having that bank statement, making those, even though it says, I don't know, Rebel Sport on it, it's not necessarily just a business expense. So I don't know, Julie, if you've got some thoughts on this, but what I was wondering is could we outline maybe 2 or 3 things, the learnings that you've seen over the years where, people can kind of take away and put some of these steps in place?
Yeah, I sort of think that someone said to me once a very long time ago that when you start your business, even though you're small, start with a mindset that your business is going to be big. So put things in place from the beginning that your business is going to grow and be a big business. So rather than a lot of people who go, oh, look, when I get bigger, I'll do this, or when I get bigger, I do that. Do it from day one. And it also gives you that mindset that your business is going to be a big business at the end of the day. But look, in today's world, there's sort of no excuse for bad record keeping because everybody has a phone. And if you buy something, take a photo of it on your phone and upload it to your software. We're so lucky these days that we have so much technology that can make our lives easier with bookkeeping and accounting. And just take a photo. That would be my greatest advice to most people. If you're still buying things where you get a receipt, then take a photo, store it on your phone, upload it to your software, and you probably will never go wrong.
Yeah, I mean, even nowadays, I'm obviously talking from Sol's perspective, but we've got OCR built into our app now, so you can take a photo of that receipt and actually pre-fills. I mean, you got to check it, but it pre-fills a lot of that information to save you time. I couldn't agree with you more. I guess Michael even said this in his opening, right? Like, we've got so much opportunity now to actually run your own business and get some of these efficiencies if you just ask the right questions and get the right systems in place. Shashir, I think maybe I can throw to you here because I know that you obviously talk to a lot of personal trainers, but also the wider small business community when you're onboarding people into Sol specifically. What do you find from people's view of technology? I mean, we've spoken here quite a few times now about get it into your system or into your accounting application. But what does that look like? Do you think people pick it up? Do you think that it is a daunting thing? Like, what is your feel on that?
My experience with customers has been that some customers have a really good business discipline about expenses and receipts that they get. Before Sol, they had spreadsheet, but they would also keep receipts on hand, right? With Sol and accounting softwares like this, what they tend to do is as soon as they have created an expense, they come back home, they're the first ones to click a picture and upload it into our system, right? Others, what I've seen is they do get bogged down by new technology systems on what to do, how to do. But most of the time, it's a simple fix. You just come in, you talk to me, or you talk to a person, whoever is managing the accounting software on your side. But from my perspective, a good business hygiene is all it takes. Technology is a lot simpler nowadays.
Yeah. I think, the sentiment that I get is that if you take that first step and you're able to find the right people or group or app to help you, I think once you get going, it becomes almost second nature and becomes part of your process of how you run your business as opposed to being this daunting thing. So I would encourage anyone, not just from an accounting perspective, but, from an admin perspective, how you manage your business, how you manage your clients, the follow up, all of that. Once you get that process in place, it makes it so much easier. And it takes a lot of the stress out of it and you get a lot of enjoyment, I think, out of your business from there. Great. I think that is enough on EOFY. Why don't we skip on to the next slide? And I think we've got some pre-prepared questions for the panel. Now, I think we had a couple of questions actually raised before the session. Let me just bring those. A couple of questions. So I'll throw this to anyone on the panel, but I'm assuming this will be more you, Stephen and Julie. But the question was, if I haven't made any income since starting the business in August 2025, can I still get tax refunds for all the course fees and equipment that I have bought? Or is it compulsory to show income in your bank account, before the end of the financial year 2025, 2026. So I think you actually made note of this one earlier as your example, Stephen. So I think this is quite fitting.
Well, of course, you've got to pay tax to be able to get it back. People don't understand that, of course. Julie, we do get a lot of people like this, of course, that come through and wonder why they're not getting a tax refund, but they've had no income all year. You've got to pay it to get it back. It's quite simple, really, at the end of the day. And if you're getting it cash in hand, that's good on you, power to you. But if it's, you're not going to claim that, it's pretty hard to actually pay tax on that too. So if there's any money coming through your bank account that you paid on invoice or whatever like that, you've got to claim that, and then you declare back the tax. Of course, the whole thing about Australia's tax system, it's based on a bracket system. So the more that you earn, the more tax you pay, unfortunately. But there are ways and means of getting that down as well through deductions and structuring and things like that, which we can help with. But that's a pretty simple question. Julie, do you want to add to that, or?
No, that's pretty much, it's a conversation that we have a lot when we tell people that they're not getting anything back and they're not maybe paying anything, is why aren't I getting a refund when I've spent all this money? So again, you do have to have paid some tax before you can get a refund in any shape or form.
There ain't no free lunch.
But I would imagine, right, like this, if I put myself in the shoes of this PT, there may have been other costs, I'm assuming, after August 25 that they would have spent money on to, grow the business, potentially drive to, different locations. I'm assuming when you're doing, and working through the end of financial year in the tax return, you actually have that conversation with them. So I'm assuming there may be some other deductions that kind of come out of the woodwork that they don't necessarily know about. So I guess that's why it is important to have an advisor who knows the system quite well.
Absolutely.
Yeah, perfect. All right, on to number question 2. So we've got, if you own a car for your sole trader business and only use it for that business, not personal travel at all, how much can you claim on tax?
So if you're just using it basically for business, you can claim up to 5,000 kilometres at the nominated rate each year, which is 88 cents. So with the 5,000 kilometres, you don't need to keep a dedicated logbook, but you do need to be able to prove that how you used your vehicle. So it might be that you attend sessions with clients 4 times a week and it takes you 25 kilometres to drive there and back. So you need to have a bit of an idea how you're claiming. If you want to claim all your expenses not using the rate, so the rate covers all your running costs, motor vehicle expenses, and you don't have to keep any other records other than how far you've travelled. With the logbook method, you have to keep a dedicated logbook for 12 weeks, and you have to record all your personal use and all your business use in that logbook. You then work out a percentage of what is business. So in this case, it would be 100% if they're not using the vehicle for anything else. But at the same time, you then need to keep all your expenses for the entire year. So that would be fuel, registration, insurance, services, and things like that. So, and then at the end of the year, we will work out the percentage and apply that to the total expenses, including depreciation if it's a new vehicle and things like that.
Just beware if you're claiming 20,000 in income and 10,000 of that is a deduction for your car travel, it may be looked at by the ATO as a possible bullshit claim. So just be careful of that. You have to be earning a significant amount of money to be able to claiming all of your costs through the car. We found that as well. I think Lewis put his hand up.
Yeah, Lewis, do you want to jump in here?
It's just it's a question actually. Does the vehicle have to be registered and insured as a business, or can it be still registered as a personal?
Not if you're trading as a sole trader, that's fine, because you are the business basically. So that's fine. And even if you do run through another entity, you can, by talking to your tax agent, you can sort of work out how that fits into your business as well. But no, you don't have to have your business registered under business.
If you've got a company, you usually buy the vehicle in the company, that you wouldn't have a personal vehicle that you transfer to the company, because it opens up some issues associated with transferring money out of there. So that's what we recommend to clients anyway. You can claim that.
And Julie, I think, when you were talking there, I kind of understood it, but it was quite complex and difficult. So I'd imagine, if I can summarize what I've heard is, if you haven't kept a logbook for the 12 weeks for this year, what you could do is you could obviously claim that 5,000 kilometers through the cents per kilometer method, and then you'd be able to help if it is beneficial. You'd kind of run the numbers with your client, and you would work out whether the logbook method next year would actually be better for their tax return. Is that kind of how you normally deal with that?
Exactly. Yeah, exactly, Johan. We would, if you're only doing 5,000 kilometers or less, that method, the cents per kilometer method, is probably beneficial. But if you're getting up around 10,000 kilometers, then yes, we would certainly go through and explain how to use a logbook, how to record keep, and exactly what is considered to be tax office compliant. So the tax office is quite hard on people that don't keep a logbook in the event of an audit. So you really do need to make sure that if you're going to go down that that method road, then you do understand exactly what records you need to keep. The good news is, though, that if you keep your logbook for 12 weeks and nothing much changes in your business, you don't have to keep another one for 5 years. So
fantastic. That's
not
great.
every year.
I mean, this is an interesting question, because actually one of the most requested features that we've had on Sol has actually been a kilometer tracker. Is actually the most requested feature that we've had. So I know Shashira has just actually launched that a month ago. But I'm assuming from your perspective, keeping a paper logbook nowadays would be very difficult. But, using an app makes it so much easier just because it's on your phone. And then you don't actually lose any of those kilometers, I'd imagine, as well.
That's right. Yeah, no, there's definitely some good ways to record electronically these days rather than a paper logbook. It is tedious to do it for 12 weeks, but truly, if you are doing more than say 10,000 kilometers or between 5 and 10, then it certainly is worth the effort to keep the logbook.
Oh, fantastic. All right, well, that was really some really good questions. I think that was submitted before. Lewis, I wanted to open up, and I think I've got a question. We've spoken about admin, we've spoken about, making sure that you can get your systems in place to kind of, set yourself up for success, if I can call it that. What do you reckon the biggest pitfalls are, or things that, PTs underestimate when they, come into the industry? Kind of, if you were, new to this industry in the last 6 months, like what advice would you give yourself?
It's a good question, and one that you want to know the answer to early on in your career. Appointment scheduling and session tracking is the easy part of PT. That's the easy admin part of PT. But I think PTs underestimate how much time is needed to be spent on things like client retention systems, financial management, record keeping, compliance. Just simple stuff like having your progress check-ins, set dates for goal reviews, send those re-engagement messages. The financial management stuff, probably properly tracking your profit numbers, not mixing those personal expenses with your business expenses, like Julie was mentioning. Underpricing your services, so knowing your worth, that cash flow forecasting. There's plenty in there. I probably couldn't pinpoint one. Even just simple record keeping and compliance. Knowing when your insurance is due to renew, your registration, CPR, first aid, incident reports. So if you can get those things managed from the beginning, then it's going to make your experience in the industry in this first 12 to 24 months a lot more pleasurable.
Yeah, makes sense. And so I guess as part of that, you've mentioned quite a few verticals or streams of work, I would say, in that. I mean, I know FITREC quite well, but I guess you've got the right partners, I guess, to kind of help with some of those things. And if someone's got a question, if they're quite new, like I would highly recommend them to obviously just come talk to you or someone in your team, I'd imagine, and you can kind of point them in the right direction to get some answers for them.
Yeah, and to be realistic, there's no more excuses anymore. Like there's so much access to so many different tools and software, and we purposely partner with these service providers so that we can then pass that on to our members to say, well, this isn't just about ticking a box anymore. This isn't just about your one-on-one sessions with your clients. There's so much more involved with your personal training business. Here are the tools to be able to be successful and remain in the industry. We're trying to increase longevity in our industry, and by partnering with specific service providers that can assist in that, then it just makes a PT's job a lot more easier. It streamlines the process, and it removes the excuses of I'm no good at that, or I don't have access to that kind of service.
Yeah, and I think, you know, you've mentioned quite a few things there. What that kind of triggers in my mind is I think how we do business, you know, as PTs would be very different now than what it used to be. I'm assuming in the old days you just had, you know, you worked at a gym or you worked for yourself in a park or something. But nowadays I think there's quite a lot of different ways you can sell online coaching programs, you can sell nutrition programs. So I've kind of got two trains of thought here. Michael, I mean, I think you've done quite a lot of work with helping businesses like that scale, and how do you actually, I think better now than ever, right? Like I think end of financial year is a really great reset period where you can kind of look at your business, look at your pricing like Lewis is saying, but also probably look at what you're, you know, how you're going about making money essentially. Have you got any thoughts on that?
So many thoughts. So we've done a lot of work with all sorts of small businesses, sole traders, you know, whether they're PTs or, you know, hairdressers or, you know, photographers, whoever they are, around how do you scale your business? Because one of the challenges that small businesses have is there's only so many hours in the day, right? 24 hours in the day. How do you use those effectively? And so for personal trainers, typically they will sell their time, you know, they're trading time for money. So then we've got to look at that and say, okay, well, why don't we productize your business? We can use your skills, then create products, whether those be in-person products or, you know, boot camps, whatever, or we make digital products out of those, online coaching courses, these sorts of things. And then how do we scale that? Because then that breaks the barriers, right? So you're not then limited to just your geographical location to get in-person clients. You can then open up to, you know, all of Australia or the whole world if you like. And these days with, you know, the access that we've got through social media platforms and building audiences, like you really, like, you've got so much opportunity, and then being able to just productize those businesses, you know, get out there on YouTube, get out there on, you know, Facebook, Instagram, all that stuff to grow that audience and then sell digital products. That's what really like moves the needle, right? In terms of revenue, income, and being able to scale, because you go from trading time for money to, you know, creating a business that can scale. Yeah.
Sorry, Lewis, I see I've got a question for Julie as a follow-up there that's really sprung to mind for me. But Lewis, have you got something you come off mute?
Yeah, in terms of scaling up, there's the reality in the beginning. The reality is that if you're a contractor or you're a rent-based trainer, the ratio of time spent on lead gen and earning an income is about 70-30 until your business builds that pipeline or generates qualified leads. And unfortunately, if you're not in the gym, your business is closed. So sometimes it takes a bit of time to generate that foundation of your business. But like Michael was saying, like there's so many different ways to earn an income through the same education that you might have now. We recently partnered with a service provider called Hypest, and they've created an app that's similar to like he calls it like an OnlyFans of the fitness industry, where personal trainers can upload videos of themselves training and sell their content. So they can have a subscription-based content where they might give 20 videos away for free, the first 20 videos that are just simple you know, deadlifts or push-pull exercises. But then if you want anything specific, then you might pay $1 subscription or $5 or whatever you want to sell your content for, and those subscribers pay for that content, and that can be sold to anyone around the world at any time, and all you have to do is just have a library full of videos of yourself. So things like that, where you can be earning money while you sleep, is an easy way to scale up if you're looking at earning extra income.
An extra premium if you're naked doing those particular exercises, I imagine.
Yeah, I mean, I haven't gone through the T's and C's, but I'm sure that there's always ways of earning extra income.
I mean, I think, you know, it makes so much sense to me. You know, I love that saying, you know, earn money while you're sleeping. I think that's a fantastic way. But I guess, you know, I am an accountant. I'm just going to come out and say that. So the first worry I have then, and maybe Stephen and Julie, you can help me out with this, but as soon as I start doing this, I'm assuming I've got different, you know, streams of income. I've now got more things I've got to worry about in the app that we've spoken about. Like, how do I make sure that I stay compliant? Like Stephen was saying before, you know, the ATO sometimes comes knocking. And I guess that is what puts a lot of angst in people's minds at this time of year. So how would we manage that? Like if you've got 2 or 3 different sets of incomes, how would you track that? How would you manage that? What are the kind of questions that you would be asking your clients at that point in time?
So do you mean different streams of income in the one industry?
Yeah, so you would have, like, you know, you might be, like Lewis was saying, you might work a good life, you pay some rent there, but you'd only spend 30% or 40% of your income comes from there, because the other times you're recording videos, you're doing OnlyFans for PTs. On the other side, you might be selling some nutrition plans as well through your website, as an example. So how does that kind of work if I want to, you know, diversify how I'm making my money?
Well, it will all just come under the one banner as far as income. So it's all income, and it's how you like to see your income. So, and I'm sure SoulApp has that easily set up for people, that they can split their income and code it to say, this is my personal training income, this is my you know, my group training income. So again, it all comes down to the setup when you start the business. So from our side, income is income. It'll all be sort of put together to you know, to look at the total, but with a good app like yours, we can you know, we can help clients to set it up so they can see what they want to see, basically. And that's how we work with clients. It's more of what they want to see rather than what we need to see at the end of the year. So we try and work with people so they can get a good picture of where their money's coming from.
Yeah, I think, you know, for me, sorry, Stephen, please.
I had a question regarding that, because I know, for example, Viva Leisure, they have a like a business format where their PTs might be completely booked out, and they start hiring PTs under them. Now they're already a rent-based PT, but then they start earning an income through another PT doing more sessions, and maybe it's their first year getting into the industry, or they don't want to be paying full rent, so they jump on the half rent with this senior PT. But the senior PT is earning an income from the sessions that this junior PT is conducting as well. Would that fall under the same income stream?
Yeah, so it will depend on it will come back to who's being paid the income. So the person being paid the income, are you talking about splitting income in a session, or is one person getting paid the income?
So I'd say that each individual gets paid for that session, but the junior PT gives a percentage of that session to the senior PT. Okay,
so basically, let's just say it's going 50-50 and they're both earning $100, then that's an income stream which would be shown in their tax returns or as income, and then the amount that they pay to the senior PT is basically an expense. So it separates. So one is an income and one is an expense, because it's going back out, even if the transaction, I'm assuming they would pay the senior PT from their bank account. So that would show as a commission, or you know, that type of expense.
Yeah. All right. Thanks, Julie.
So I think, you know, let's say that I'm not worried about that anymore. So I've got my ability, my system set up. I'm going to do the tracking. I'm going to be, you know, completely compliant. I guess, to me, if I'm thinking about then how do I go to the gym and actually start earning a little bit more money? To me, the two levers that I can see as you know, not being very experienced in this space, and Michael, I guess you'd be best placed to answer this, but you know, I've got the lever of price, so I can obviously increase my price. But what I'm worried about is if I increase it too much, then you know, people are going to look elsewhere, or I'm going to have to start working more, essentially. So like, I guess, maybe this goes back to the diversification, but I guess my question is how do you make sure you get your pricing right and your hours right so you don't burn out essentially, but you can start earning a bit of money and potentially then be able to diversify and spend some time in those other channels?
Yeah, so I think you've got to, look at what the industry is charging and then sort of see where you fit there. But what we typically do when we productize people's businesses, we like to have different tiers of products. And then that also opens up your audience much more. It also depends on when where you're coming, or as people are coming into your marketing funnel. Typically, you might have a bunch of free content out there. That free content drives the awareness, builds a lot of trust, and then you push them through the funnel to your cheaper tier products. That also then builds more trust, and then as you work with them and build that relationship, you've then got higher tier products, which are really what you're sort of aiming to get people through to. So an example of this is, maybe you've got like a nutrition guide that you sell online, and then you've got like an online course. Let's call your nutrition guide $50 to buy, and then $250 for your online training course, 12-week course, or whatever it is. And then you might have an in-person boot camp, which might be a couple of grand, something like that. That then gives you those product tiers. And yeah, hopefully that answers your question.
Yeah, no, I think that makes sense to me. I mean, Lewis, have you come off mute again? Have you got something to add to that?
Yeah, I do. So if a PT wants to lift profit without adding these hours, I've thought of 3 suggestions for this. One's education, another one's experience, and the other one's professionalism. Now, longevity in the industry doesn't always mean more. So education, so increasing your professional development so you can justify charging more. Surround yourself around experienced trainers that will support you and guide you into becoming the trainer you want to be. But that level of professionalism as well, so respecting your clients, show them they have your full attention, learn to adapt to your surroundings. These are all little things that you can then add to your pricing structure, because you're showing that level of professionalism as opposed to another trainer. I know that when I was younger, I've been in the industry for 25 years now, and 15 of those were one-on-one PT sessions. And I always had the mentality of working less, but for more. And as I matured, I realized that it wasn't about that. It was more about knowing your worth. So if you implement all of the tools that we've spoken about today, and any of those suggestions, whether it's education or that level of professionalism, you put in that groundwork to set those foundations, you can start justifying charging more. I would be in a gym where the trainers were charging around $35 to $45 for an hour, and I'd already had about 12 years experience in there, but I already had that knowledge base and that professionalism, my education, and I was charging over $120 an hour. And the trainers were thinking, well, it's all, like, more than double than what we're charging. How are you going to get clients? And within 3 or 4 months, my calendar was booked, and it all came down to how I came across to my clients, the level of professionalism that I had, and how I showed my education within our sessions, and then the word just spread. So I didn't necessarily have to work twice as hard, but I was working what I wanted to work, but charging what I was worth.
It comes back to scale, as Michael said earlier before. It's very, very true, Michael, what you mentioned. That you've got to get a handle on scale if you really want to grow a business. And there's 3 ways that I reckon you can do it. The one is you have to try and duplicate yourself, which is generally the most expensive way of doing it. But what you should do is, as the practice owner or the business owner, you should set yourself up as the person who charges the most in the business, because you have the most skill. So again, that creates those tiered sort of effects. So if, for example, someone wants to talk to me about structuring, they're going to pay a higher rate for a partner, for example, in a business. That creates that level of duplication, but it also pushes you up the level where you should be actually consulting at a higher hourly rate. But as Michael very rightly pointed out, having digital products, replicating yourself in other ways that doesn't require you to go out and get another head count, which is the most expensive option, just where I go. People classically, there's people do webinars, and they do webinars with 30 people, and they might charge them $100 each, $3,000 in that session. You can't possibly make that out there on a one-to-one basis. So that's the real key. And it's difficult as a business owner, because you've been running the business so long yourself, to actually step out of your own shoes and start looking down on the business, rather at the same level, and creating structure in place where you're bringing people in to do those specific jobs. Once you get that, then it's simply a matter of adding, the strategy after strategy to trying to take it up. Otherwise, it'll just send you mad. And one of the things before I was just going to mention as well, from the accounting perspective, I think it was Lewis said that you should always have two business accounts, right? So one for personal on your bank accounts, one for personal and one for your business. You should have another one for tax. So a lot of people, for Johan, you mentioned what gets people into trouble. What gets people into trouble more than anything is they don't pay their tax, right? And they leave it and they leave it and leave it. They get a director penalty notice if you're a company, or, and once you actually haven't paid your tax for a couple of years, where are you going to get the money to pay tax? You've got to borrow, right? And if you can't borrow, then basically you're stuffed. So always take, we reckon 10, 12.5% is probably adequate for new businesses of your overall revenue. Throw it into a separate account. Sometimes put that account in a different bank because you can't reach it. You know what I mean? It might be a bank that you don't even have a card for. You have to actually turn up to the branch and get the money out, or something like that. But it takes the tax away, and it brings it back in when you need it. And if you can do that, I think that's a really big step. A lot of people just don't do that.
Yeah, I agree with that, mate. I think, when we were putting Soul together, that was one of our big considerations. So we've actually put a tax estimator in the app that actually helped it. So, you can set your goal based on, a forecast of how much you're earning. You can update that with your accountant and your expert that you're working with as well. But then that will help you actually tell you how much to put away. You link that into your separate bank account. You can link that in there. You can track it. You can manage it.
What you don't do, you don't want to put too much money away into your tax department. Otherwise, you've got no operating capital, right? So some people I know, I'll put 30% of my income away. Why? It's just going to sit there. You're not going to be able to do anything with it. You can't use it to grow the business. It's a waste. So you've got to try and work out that amount. If you don't know straight away, I said 12 to 15% is probably adequate to start you off. Because don't forget, you've got GST, you've got end of year profit. With new businesses, they generally don't make a lot of profit in the first couple of years anyway, so it's not that bad. But if you're GST enabled, obviously that's the big one. You're collecting money for the government. You've got to pay that back, right? People don't think about that,
Fun fact for you, or not so fun for me. My first year of running my own business, didn't do any of my BAS, didn't put any tax aside, GST, anything like that, and found out about 14 months later that I owed $14,000 to the taxman.
Yeah. That's a horror story, isn't it? The other thing that I personally hear quite a lot is that people forget to follow up payments. So the difference between making profit, Stephen, like you just said, versus having cash flow. One of the big things that we try and solve as a business is really trying to make sure people have cash flow, being able to set up recurring invoices, automatic direct debit collection. I've got one more topic, I think, just in the interest of time, that I want to go through. But Shashir, I just have one question, I guess, for you from an app perspective. I'm really interested to understand, when you've spoken and worked with PTs, set up their accounts, like what are those key, if you have to pick three things that they needed to do to set up an accounting system to make it work for them and automate and save them time, what would you be doing? Or what would you suggest to them?
From a PT perspective, first things first, make sure that they are registered at FITREC and their account is connected, because that gives them a lot better branding presence when they're sending out their invoices. Secondly,
what do you mean by that?
Sorry.
What do you mean by connected to FITREC?
Sure. So because of our partnership with FITREC, the way we've set things up is, if you are a member at FITREC and you're also a member at Soul, you have the ability to log in. If you've chosen PT as your industry, you're going to be prompted to connect your FITREC account. You can do that by just providing your user ID that you use at FITREC, right? Secondly, in that same stead, it would be great to have to set up essentially your expenses and your branding for your invoices. That's something that's going to be helpful for you as you send things out. You can set up templates. Our system allows customizable templates and with different training, with different regimes, what you want to send out, what you want to sell out. So it would be a lot easier for you to set those up early on so that you don't have to waste time at a later period when you get a client and you have to maybe just send out a generic invoice on a recurring basis.
Cool. That makes sense to me. I think, if you set those things up and a small investment up front, and I'm assuming, they can call you and you can help them do it, like you and your team. But I guess what's important for me is that small upfront investment actually makes the rest of the year and ongoing from there a lot easier. So a little bit of investment of time really pays dividends. I'm conscious we've got 3 or 4 minutes left. When I was canvassing themes of the kind of questions that people were asking, I think the last one I just wanted to land on, and Lewis, I might throw to you on this one, is what's the sentiment, I guess, in the industry from your perspective around the budget that got released? There's big things being thrown around like the asset write-off. I don't even know what all of these things mean. And, I have been an accountant for a while. Like, what do you see, I guess? What's the sentiment from the industry?
I sense a lot of confusion.
Yeah.
And it's difficult to get the right answers from the right people. So I think it's an opportunity for us or anyone that is part of those decision-making decisions or even just those experts to be able to give some clear advice on what to look for, on what to do. So it kind of opens it up for us to be able to be ahead of it and start talking to them in real terms and make it and simplify it for them.
Yeah. And I'm assuming, Julie, Stephen, you're getting these questions already, even though it's not even end of financial year. I'm assuming you've got that confusion and people are asking you some questions. What are the kind of general things that you're suggesting and saying?
Just cool your bloody jets for a while, because people are freaking out about this stuff. And I tell you what, it's not really going to affect most Australians. Where it's going to affect people that have got fairly large asset bases like property and things like that, and they want to sell it down the line. It's capital gains tax is the biggest issue, or if you own a trust, then you could be taxed a little bit more on that. But a trust is still a great vehicle for holding into assets. But also, looking at the PT community, they don't need to worry about it too much. They've still got the instant asset write-off, which is a good thing, but kind of works better for tradies that are buying things like utes and stuff like that at the end of the year. If you're a PT, you'd have to buy a significant amount of equipment to really benefit from that instant asset write-off. And what that is basically is you can buy a crap load of stuff, and if you've got a tax problem at the end of the year, you can write that off at a higher rate than you normally would be able to. And as I said, with PTs, they're not going to be buying gym. Well, if you own a gym, yeah, you might be buying gym equipment, but for PTs, they're not going to be buying $20,000 leg presses. What they want to be buying is smaller things, for the end of the year. And can I just say really quickly, just in closing, that the great thing about trainers and the great thing about the fitness industry is most of the people we talk to is they're intelligent people, unlike a lot of the other trades. They're very smart. They're totally motivated, and they're very, very healthy themselves. So they've got a very clear mind. And I've never met one personal trainer that doesn't want to be entrepreneurial and to build a massive business. I was talking to a 19-year-old trainer the other day, and his goal was to own 10 businesses, but 10 gyms by the time he was 30. So they're all, that's the great thing about it. Most of the people I work with in the industry, they're pumped. They really want to do well in business, and they seem to really love their job. I went to an Anthony Robbins conference about 10 years ago, and he said he loves working with PTs as well, because they're always like this. They're completely into their work, and they're so goal motivated and things like that. They know about themselves. So yeah, I've probably gone off track a little bit there, but that's just how I feel about working in this industry.
No, that makes sense. Esther?
Just on that note, I wanted to ask a question to Michael. If you were a young PT who wants to grow and let's just assume does not have an internet presence for whatever reason, where would you start? Which platform would you focus on? Would you build a website? Would you just use TikTok or Instagram? What would your like top 3 tips be for someone starting out in the business?
Sure. So I'm always somebody that thinks, do it once, do it right. So I'd build my digital infrastructure. So that's, basic website with a good sort of SEO foundation. I would, these days as well, like 2026, I'd be looking to try to get recommended by, ChatGPT or Gemini or Perplexity or any of these sort of, AI agents. When people, there's a ton of searches happening through AI these days for, health recommendations or, like personal training advice, or like, can you write me a program? And so I'd structure my content on my website around that, the answer engine optimization, generative engine optimization. I'd do that. I'd get that foundation right. If you can do that, I think that sets you up really nicely. And then obviously you've got all your other, and you own that platform, right? You own the website. Nobody can take that away from you. And then focus on your social channels, your Instagrams, your YouTubes, your TikToks. Those are sort of the places where you can build that audience and get out there. And then obviously your in-person stuff as well, that's super valuable. So that's sort of how I would approach it. And then, like I said before, I'd start to map out how I productize my business. How do I look at how I can do this to have the scale, and then sort of build it that way. And then loads of different ways you could do it, but that's sort of how I would do it.
Cool. All right. Thank you so much, Michael. I think that was a great answer. I think it's quite daunting, to be honest. There's so many different channels and things that you can now, invest time in. So it's really important to kind of, pick which ones will work for you and kind of stick with them. So I think that's fantastic. I just wanted to say a big thank you again to each and every one of you on the panel who came today. We appreciate how busy you are, and thank you so much for taking the time and investing it here with us. We look forward to potentially doing this again in the near future if people have questions. So yeah, I just wanted to say thank you, and hopefully this helps everyone get their records right and start asking some questions, and hopefully we can see a lot of them succeed. So awesome. Thank you so much, and we'll chat soon.